Okay. I'm sure you guys have seen the eye stars that I've given you, right? Like 4 of them. Like 2B, there's what? Giving you 3 point, actually, I don't even know. 3.12 is one of them. And then I think I've given you 3.9 or 3.8, and I think 3.9 or 3.10, one of the two. Okay? Guys, please do those eye stars, okay? I might give you 1 or 2 other eye stars, but I want you to do these ones because then I think the deadline is 15 October for all of your eye stars. So the other 2 that I might give you might actually be after that. So these are the ones that will actually count towards the 10%. Okay. So just knock these out the park, get them done, and then that way we know that, okay, in terms of the 10%, we're sorted. All right, and then you guys can obviously worry about other things. Okay, right. Then, yeah, so let's see what's going on there in activity 3.12. Okay, so I've already done activity 3.11 with an earlier class. All right, so I'm going to upload that onto the YouTube channel. Okay, and I'm going to continuously be doing this thing where I'll do certain exercise with the other guys and certain exercise with you. Because the reality is we just don't have enough time to get through everything like we usually would. Okay, I'm seeing like I see you guys, and then after this month there's another 2-week break or 2 weeks where you're writing tests or something like that. So that's obviously time that we've lost, and then so yeah, you guys are going to use the YouTube channel probably a whole lot more than you have when doing 1A. Okay. But yeah, I'm glad to hear that the test was good. Other class seem to, or should I say the exam, other class seem to also find it fairly good. So I'm quite happy to hear that. Right. That said, let's get into it. So 3.12, under the required, it says complete the note to the financial statements relating to property, plant, and equipment for the year end 28 February 2004. Okay, so here you're going to definitely need your timelines, probably even more so than depreciation. But if you don't know depreciation, or if you're struggling with that, I'm sorry. You've already lost 30, 25 marks here. Because you cannot do this if you can't do depreciation. Does that make sense? Okay? But you'll see how easy it is. Okay? So all that I'm requesting of you is just practice, practice, practice. Okay? I already confirmed there's only 2 of these exercises in your textbook. They like to bring this in the exam. Okay? Not usually in test 2. In test 2, usually they'll just bring depreciation. But they like to bring this in the exam. But either way, just make sure that you know it. Okay? Right, that said. So we know that we are doing this for the year end 28 Feb 2004. So what you want to do is immediately, now where's this thing? Okay, that's what I want. Immediately you want to do your timeline, okay? Okay. So let's work with, okay, so you want to draw your timeline. We know we want to do this for 28 Feb. This is this 04. So that means that when is our financial year beginning? 1st of March, yes. 2003. Okay. 03. So this is the financial year that we are busy with. Okay. Let's just pretend like these lines are straight. Okay. Sweet. Now that we have that out the way, we then can now begin to read the question. All right. Up top it says the following balances were taken from the trial balance of Benjamin Traders on 28 February 2003. Can you see that? Okay. So I've already drawn this table out there for you. Let me actually shift it up a bit. Okay. Now, if you actually look at the structure of this thing, and where's an example of it? If you look on the subtitle 3.5, disclosure of depreciable assets. Okay. There you see an example of the property, plant, and equipment layout. You'll see that you do have carrying value, right? All right. It says at the end of previous year. Okay. So I want you guys to obviously just take note of this. All right. If you look at costs there, you don't have. If you look at your structure there, you don't have the actual date there. Okay. So you guys, I want you guys to get familiar with that. What's in red. Okay. So that you know. Okay. This is for at the beginning of the year. Okay. Basically. All right. Carrying value at the beginning of the year. All right. Then obviously now we're working towards carrying value at the end of the financial year. All right. All right. And you'll see why that's very important, because I think when it comes to the property, plant, and equipment note, it's one of two things that will make you fail this thing. It's not knowing where to actually put information, one, and two, not knowing how to calculate depreciation. Okay. But otherwise, if you understand those two things, all right, both of which you can only master with practice, then you'll be fine here. Okay. You'll actually be excited when you see this. Okay. Right. So anyway, let's get back to the question. So we have land and buildings, 400,000. Okay, cool. No problem. So what we simply do is we go to land and buildings column. All right. Okay. Okay. We go to cost and we put 400,000 in there. Okay. Right. And then can you see we don't have accumulated depreciation for land and buildings? Can you see that? All right. So here, under accumulated depreciation, we leave it blank. Okay. Let me actually remove this and just do this. Dash. So that means that the carrying value, because remember, what is carrying value? It's the cost of the asset that we purchased it for minus the accumulated depreciation. All right. So since there is no accumulated depreciation, this then becomes 400,000. Okay. Then, did we buy any additional land and buildings? Let's look under additional information. There, the first bullet point is talking to vehicles. Second bullet point is talking to equipment. So we didn't buy anything new. So there's no addition at cost. Okay. So that we're going to leave as a dash. Did we dispose of any land and buildings? Again, we didn't speak to this. So again, let me remove this and just put a dash there. Okay. So there was no depreciation as well. Okay. And we know typically land and buildings appreciates in value. Okay. So again, there's another dash there. So again, there's going to be nothing in terms of movements. So we're going to put a dash there. Right. So your carrying value at the end of the financial year is going to be your carrying value at the beginning of the year minus or plus your movements to get the carrying value at the end of the year. So we have 400,000 minus or plus 0. So that obviously gives us what? 400,000. Okay. Okay. Right. The cost here is still going to be 400,000 because we didn't sell anything, we didn't buy anything. So the cost will remain the same. There was again no accumulated depreciation. So we're going to put a dash over there. Okay. And when you're doing this property, plant, and equipment, I want you guys to just focus on one asset class. We're dealing with land and buildings. We finished land and buildings. Now we can move on to vehicles. Okay? Don't be working on vehicles and then also working on furniture at the same time. You're going to confuse yourself. Okay? Just focus on the one. Okay. So now we move to vehicles. We look at vehicles, and there in the table it says vehicles 240,000. Okay. So that was the cost of the vehicles that we had at the beginning of our financial year, 240,000. Did we have accumulated depreciation on our vehicles? Yes, we did. And that was 400. Okay. So then what is our carrying value now for vehicles? Is it 170? Should be 160 something. Okay. So now we have our carrying value at the beginning of the financial year that we are interested in. Okay. Now, what else is going on with vehicles? We now need to go to the additional information. It says depreciation is taken into account as follows. On vehicles, 20% per annum on diminishing balance. Okay. On 28 February 2004, a vehicle with a cost price of 80,000 and accumulated depreciation of 39,040 as at 1 March 2003 was sold for 40,000 cash. No entry pertaining to this transaction has been made as yet. Okay. So what just happened here? We sold the vehicle. Okay. When did we sell the vehicle? Okay. 1st of March 2003. Okay. So again, now we need to do our timelines. Okay. So basically, what are they telling us? Can you see that this balance that we have here for vehicles, this 240,000 and 70,400, both of those, on what date did we have that information? 28th of February. Can you see that's the day before we sold? Because we sold on the 1st of March. So basically, the totals in terms of vehicles, in terms of the actual cost and in terms of accumulated, includes the vehicle that we just sold on the 1st of March. Because that was a day, yes, we need to get rid of it. Okay. All right. So already you're beginning to see that depreciation, what you've learned in terms of depreciation, taking place. So when did they say we bought this vehicle? Let's just do the timeline here quickly. This was on 28 February, a vehicle with a cost right to.
But so don't you just take the 80,000 minus it from the accumulator, and then that's your disposal?
Sorry, just give me a second here. I'm trying to see. On 28 February 2004, a vehicle with a cost price and accumulated as at 1 March.
So we have to do the depreciation for the year, because isn't that like a year before? Yeah.
I'm just trying to figure out here when this thing was actually sold. I think it was actually sold on 28 February 2004.
Yeah, so we just have to do the depreciation
for that year.
Years.
Yeah, so it was actually bought, I think, on the 1st of March 2003. Does it make sense? So we bought it at the beginning of the financial year, but we sold it at the end. So these guys, okay, they got us there. So we sold it for 40,000 cash. I'm just gonna put 40K. Okay, and here we just put sold. Okay, and we bought this thing on the 1st of March. I'm just gonna put B there. And that was for 80,000, right? Okay, cool. And the accumulated depreciation as at now I see. So actually they're not telling us when they bought this thing. They're just telling us the cost is. We're going to need to do that. So my apologies. We didn't buy it on the 1st of March. They're just telling us that the accumulated depreciation as at the 1st of March 2003 is that 39,040. So I'm just going to put AD there. Okay, right. So now what we want to find out is what was the depreciation that took place during this financial period. Okay, over here. Okay, you know what, let me do it like this. Make it neater. Let's just do this. Okay, so we want to know what was the depreciation during this financial period, because that's part of our financial period. We have the cost. We know the cost is 80,000, right? Remember, when it comes to vehicles, depreciating 20% and the diminishing balance method. So we're saying 80,000. Okay, actually, I don't need to do this either because the amounts are right there. Okay, so this 80,000 minus the accumulated depreciation on the first. Okay, 49. 960. 40960. Okay, so let's just imagine 960. Okay.
So you just take that amount times by the 20% and you minus that amount.
Because this is the carrying value. And remember, we're on diminishing. So yes, we can just then times that by the 20% depreciation rate. Which is? 8,192. Okay. 8,192. 8,192. Okay, that's fine. So now we know the depreciation that took place on this vehicle that we sold at the end of the financial period. Can you see this was the carrying value at the beginning? So now we want to know what was the carrying value at the end when we actually sold it. Okay, so we're obviously minusing the 40,000 from the 8,192. Okay, so let me just actually write that out for everyone to follow. Is it making sense for all of us? Okay, so you said that was 30,768. Okay, cool. All right.
So what we do now that we've got a profit on the disposal of the asset?
So that's a very good question. What do we do? I'm opening it to the class. What do we do, guys?
Wouldn't that be in the disposals, it would be a decrease in
Anybody? We made a profit because the carrying value is 32,000, but we sold it for 40,000. Do we do anything with it? It doesn't affect your property, plant, and equipment. Okay? So it doesn't affect. If we were in the journals or in the general ledger, it would be necessary information for what we're doing.
So then with that, in the disposals and the movements, it would be the 32,768.
So yes, we come back here. So now we can actually record the disposal, guys. Remember, we're on vehicles. So we come down here to disposal at carrying value. Can you see? We're not interested in how much we disposed the asset for. We're interested in what was the carrying value of the asset we disposed. Okay? And we calculated that to be the? Okay. So now we have that. Okay? Then the next thing we want to calculate is the depreciation for the year. All right? How much depreciation did we have for the year? But remember, we're only interested in vehicles. Okay? So we did already calculate that on this asset that was sold, right, we have this depreciation over here. Yebo. We have this depreciation here for 8,192 for the asset that was sold at the end of the financial year. Okay? But is this okay? Ask your question? Or am I going there? Okay. But we know that we have other vehicles. Because remember, the value of this vehicle was only 80,000. What's the value of the vehicles that we have? 240. So then we have to now calculate the depreciation on the other vehicles. Okay? So then we say, okay.
So would we take the 240 minus the accumulated depreciation at the beginning times the rate?
Not exactly. You just forgot one step.
Don't you have to take up the vehicle you disposed of?
Yes. But actually we don't, because we had that for the whole financial year. So you're actually right. We actually don't need to remove that. Okay? Because we had all these vehicles the whole year. Okay? But I think since we have already calculated the depreciation on this one asset, it's easier, I think, then to just separate. Because then we are going to need to subtract that at the end. So I think it's easier just to separate now. So, like we've done with depreciation, what we'd then do is we'd say, okay, this 240,000, okay, minus, I'm just going to put 80K here, because that's the value of the asset we sold. Okay, then minus the accumulated depreciation, because remember we're on the reducing balance method. Okay, it was 70,400. 400. Okay, but again, we have accumulated depreciation on the asset we sold. So minus the 39. 040. Okay. And some of you, if you're wondering why did we use the 39040, because remember we're still at the beginning of the financial year. Does it make sense? Still at the beginning. Okay. We want to calculate the depreciation that took place over here. Okay. So then you get the total here. That's going to be the carrying value now of the assets that, so let me say this, the vehicles that, the other vehicles that we have, okay, for this financial year. So here, okay, my advice to you is that you obviously calculate this first, but just in the interest of me writing too much and how slow this thing is, I'm just going to put big brackets there, and then I'm going to say times the 20%. Okay. So 0.2. Okay. And what do you get?
The 0.2 is 10,112. And then the carrying value.
10,112.
Yeah.
Okay. So that's the depreciation on all the other assets. So before we go any further, remember what we wanted to calculate was, oh my goodness. Okay, let's go back there. Okay. Remember what we wanted to calculate was the depreciation for the year on vehicles. So let's quickly do that first before we go any further. So we want to now add, what was the depreciation that we had on the the vehicle that we sold? 8,000. 192, and then the depreciation that we just calculated, 10,000. 18,304. Okay, so that's what we need to throw in here. 18, so that's the depreciation that we had for the year. 304. Okay. Is it making sense, guys? What's not making sense? Oh, where did we lose you?
How did you get the 10,112 again?
So
You take your 240,000, which is the vehicle's cost for what they give you, minus the 80,000, which was the cost of the vehicle, the one that we got rid of.
Okay, why are we minusing the 80,000?
We've already worked out that depreciation.
remember, we've already worked out the depreciation on the new. I keep saying the new on the vehicle that was sold. Remember, we did that right here, which was this 8,192.
So we don't want to calculate it on top of the other value again.
You see, because then we'll have to remove that 8,000. You can do it either way. You still arrive at the same answer. Okay? So what we're basically saying is, since we've already calculated depreciation on the one, right? Now we want to calculate the depreciation on all the other vehicles that we still have. Does that make sense? So that's why we're removing it. Otherwise, we could have just left it. Does it make sense? And then just calculate all of them together. Okay. But now we just need to double check this calculation because the amount that I arrived at and the amount that we have arrived at is not the same.
Yeah, that's why all of it.
So let's do this together. 240,000 minus 80,000. What do we get? 160. Yes. So we're happy there. Then can we quickly just calculate 70,400 minus the 39 and 40 rand?
664,960.
Okay, now
Isn't it
660.
31,
Yeah, you should have 31 something.
360?
Okay. So let's do this together. So I'm just gonna write the amounts. So 31, how much? 316.
Isn't it
313.
313.
31,360? That's how I got 70,400 minus 39,040.
Okay, I'm gonna need a third person to make sure.
So look,
31,360.
Okay, so we're together there now. Okay, and here we said 160K. Okay, right, cool. So 160K minus now this 31. Remember, what are we doing here? We're saying total cost of the other vehicles minus the accumulated depreciation on the other vehicles at the beginning of our financial period. Okay, to give us the carrying value, okay, which we're then going to say times 20%, because that's our depreciation rate. Okay, what do we get?
128,640.
What do you get?
160 minus 31,000.
Times.
Okay, I didn't do that.
25,000, how much? 728. Okay, cool. All right, so I'm scratching out this 10,000 here that we calculated initially. Okay, right. So we have that 25,728. So that's what we need to replace here. Oh my goodness, right. You said 25,000 to 8. Okay, and when we add that to the 8,000, 920. Thank you very much. Okay, so that's also going to change over here. 920. Okay.
Sir, you know what I did to get that amount?
You
I
just
just pretty much took the 240,000
minus
7 times 20%.
Yeah.
That's how it's
Easy.
Confused
You
as
want me
to.
do the computation?
Yeah. No, that's fine. You can do it just that way as well. That's fine. Since it's so it's really just about your timelines and understanding what's going on. Okay. So yeah, that would have been a lot faster had we done that. Okay. So again, we're here, right? There's no additions. We didn't buy any new vehicles, so we put a dash over there. So now we can add those two together. And what total do we then get at?
66688.
6.
6.
Okay. 88. Okay, so now we have the total movement. Okay, to then get the carrying value at the end of our financial period, we simply say, what was the carrying value at the beginning? Minus the movement or plus the movement. And then we get to, what did you guys say? 1?
102,912.
Okay, everybody still happy? Are we together? Okay, now over here, remember we're now looking at the cost of our vehicles at the end of the financial period. So we're saying, okay, we know we disposed of a vehicle worth 80,000. So the 240 minus the 80, which is going to give us the 160. And then again here we're looking at the accumulated depreciation only on the assets that we still have or the vehicles that we still have. So how do we arrive at that one?
You just minus.
And this is where now it's kind of advantageous that we split them, okay?
So,
Because now you would have to do some of the,
since we
Yeah.
were given the accumulated depreciation for the vehicle, so which is the 2904, wouldn't we say the accumulated depreciation at the beginning?
Yes.
minus the-
so let's do it step by step. So we know the accumulated depreciation at the beginning of the is the 70,400, yes,
minus the 39,
minus the 39, yes, 040. And then what? What must happen? Remember, accumulated depreciation is just what is all the depreciation that we've had on these or this respective asset. Okay? In this case, it's these because we're saying the accumulated depreciation on the vehicles that we have on 28 February. So in other words, all the vehicles that we still have at the end of the financial period. So here we would then say plus the accumulated depreciation that we had on the vehicles that we kept. And remember we had the 25,000, you see. So that's plus the 25,000, 728. Okay. Can you see we did not add the one that we have sold? So at the end of the day, you are going to need to do those calculations. Okay. But what's important here is that you obviously know where am I including this amount, where am I leaving this out, and you'll be home and dry. Okay. So what answer do we get? 57. 088. Okay, that looks about right. That looks familiar. Okay. Yes, we are on track. 57088. Okay. Are we still together? Everybody happy? Guys, if you have questions, ask.
So can you just explain that whole calculation again quickly? So
Okay.
the 70 is the accumulated at the beginning of the year.
Aha. And this is why it's so important to have your timelines. Because remember, on the 1st of March 2003, if you look in your textbook, that table was for 28 Feb 2000. So in other words, just the day before. Okay. We had the vehicles. The depreciation on vehicles was 70,400. Okay. Right. Then, so that's on all the vehicles we had. We only sold the vehicle at the end here, 28 February. So we know we need to include that day. Okay, so we have that, right? Then we're saying, okay, now the thing about that is we are looking for the accumulated depreciation when? On 28 February 2004. And we know we sold that as that vehicle, all right, on that very same day. So it's no longer a part of our vehicles. So we need to remove whatever accumulated depreciation we had on that vehicle that we disposed of, which is now the negative 39,040 Rand. Cool, happiness there. But then we need to obviously include whatever depreciation on vehicles, which we calculated over here, took place on all the other vehicles that we still have when? On 28 February 2004. Does it make sense now? Okay. So that's why we're now adding that 25,000. And can you see for you, if you had calculated the way you did, which is perfectly fine, there's nothing wrong with it, where we just calculated the depreciation on all our vehicles, you would have now needed to subtract this 8,192 and the 39,040. Okay? Because in your calculation, you've included that vehicle that we disposed of. So again, guys, this is why I say, for 1B, make sure that you've had a good night's rest. I know I always used to say this in 1A, but it's these small little things. You do all the right calculations, and then you just forget to deduct that or to add that back in, and so forth, so forth. And then obviously you don't totalize where you should actually totalize, okay? So, everybody happy on the vehicles? And can you see now why I was saying, just focus on one section at a time, okay? Now, I want to show you something interesting. When you add, or should I say, yeah, when you have your cost and you deduct it from your accumulated depreciation, what amount do you get? So 160 minus the 57 and 88 Rand, what do you get? You get? You get the carrying value at the end. So this is a quick way that you can quickly check to see, did we actually calculate this correctly? Because remember, how did we calculate this? We said the carrying value at the beginning of the year minus the movements or plus any movements. Actually, let me say plus, because mathematically it's plus actually. Plus any movements, that's how we arrived at 102, 912. Okay? So that's a quick way that you can quickly just double check. Yes?
So if there were additions, would you add that to the carrying value?
Yes, if there were additions. So let's say if we had bought a vehicle for 20,000, then this would be 180. But you would find that also here, so this would be a positive here because the additions happen here. And we'll see this in the next one. I think we do buy some furniture. There would be a 20,000, a positive 20,000 here. So that means that this would be a 46,000. Does that make sense? So can you see either way it would have incorporated that addition? Excellent question. Okay.
So to work out that accumulated at the end, we didn't actually have to do any like mathematics. We could just take the 160 minus the 102. You know, give us an answer.
The one, sorry?
So you take the 160 minus the carrying value will give you accumulated.
Yeah, you could have done that. You see, but those are things that you only come to learn when you're familiar with your structure. So that's brilliant, actually. You could have done that, okay? Right. So let's finish this off. Let's get into the furniture, equipment. So the last asset there that we have is equipment. So there in the table, it says equipment, the cost is 52,000. So again, we come here 52,000. We plug that in. Then what is the accumulated depreciation on equipment? Is that 24,600? Okay, we've dealt with that. So what is the carrying value of our furniture at the beginning of our financial year? 7,400, and we calculated that by simply cost minus the accumulated depreciation they've given us. So we have that, happiness. Then let's see what additional information they give us. They say on equipment, or well, let me just read the whole thing. Yeah, depreciation is taken into account as follows: on equipment at 10% per annum on cost. Oh, thank goodness. What does that mean? We know that it's straight line depreciation. Okay. Then it says take into account that a new office computer was purchased for 24,000 on 1 March 2003. Sorry, you're saying?
It's just a full year of normal depreciation.
Yes. But let's see. There's something interesting here. So what color should I do this? Let me do this in green. Okay, so I'm going to use the initial timeline that we had. This table that gives us the value and accumulated depreciation, on what date was it? 28th of Feb 2003. So that's literally just a day before the beginning of our financial year. So what does that mean for us when looking at equipment?
That's all excluding the other equipment that we have. It's not the new stuff.
It does not include what we purchased on the 1st. Okay? So we have one of two options. We can just add the new one to the old one and then calculate the depreciation on all the equipment, or you can separate them. Either way, it'll work just as well, because both is for 12 months. Does it make sense? We've had both for a full year. We must just add, keep our life simple. All right, so here we have what? Furniture is 53. Oh, I'm looking at the wrong exercise, sorry. 52. Okay, and then I'm going to say plus 24. And now some of you might be saying, but sir, the other equipment that we had is older than the one that we currently have. And you're 100% right. But because we're doing depreciation on cost, we can add them together. If it was reducing balance method, where it's like, okay, we've had the other equipment for a couple of years or whatever, then we couldn't add, because we'd have to remember, reducing balance method is the cost minus the accumulated depreciation. All right. With the new equipment, there's no accumulated depreciation, so we would have messed up our calculation. Can you see that? Okay. But in this instance, it's on cost, so we can just add these two together and then say times 10%. Yebo.
I think the answer is the actual depreciation is 7,600. So the answer should be 76,000. Like the full amount times the 10%. So it should be 76,000 times 10%, which is 7,000.
Okay. So are we all arriving at that 7,600? Okay, cool. So now we've got our depreciation for the year on equipment. Let me quickly change back. Okay, so that was 7,600. Happiness there. And did we dispose of anything? We didn't dispose of anything, so that's going to be a dash or a 0. And guys, it's important that you put those zeros there or those dashes there, just so your marker knows, I actually know that there's nothing here. All right, there should be nothing here. Okay, so then we bought this, and addition at cost. So literally, we're saying, yes, we bought something, and this is where your question is now coming into play. Yes, we bought something, and we're going to include that at the actual cost that we purchased it at, which is the 24,000. Okay. Right. Now, what is the total on our movement? 16,400. And you got that by saying 24,000, which is positive, minus the depreciation for the year. So you said 16, how much? 400. Okay. Okay. Actually, this is supposed to be positive, sorry. This is supposed to be positive. Okay. Right. So now what is the carrying value at the end of our?
That's 68,400.
68.
Because don't you take all the equipment, which is 76,000, minus the 7,600, which is the depreciation for the year. Oh wait, I didn't do the order. Sorry.
So yeah, this is the equipment. So what's the carrying value at the end, guys? How do we calculate the carrying value at the end again? Yeah, there's two ways. But we have information for one way as it is.
So I think that's 43,800.
How did you calculate that?
So we add the depreciation for the year plus the accumulated from the beginning. I think that's what I did.
What you did is what I did.
So,
What did you guys do?
Okay, so for what I did, I found that you need depreciation at the end.
Oh,
And then I went.
okay, you guys went the other way. Okay, fine. Let's go that way. So accumulated depreciation, what did you guys say it was?
32,200.
How did you get that?
Because the accumulated depreciation at the beginning
Yes.
plus the depreciation for the year.
Aha. Okay, cool. And you got
32,200.
32,200. Again, why are we able to do this time? Because we haven't disposed of anything, right? That depreciated during the financial year that we're actually interested in. Had we disposed of something that actually contributed to some of this depreciation, we wouldn't have been able to add. We would have had to begin to break down, okay, and so forth, like we did previously. Okay, so happiness there. Then you guys went to the cost, right? And what did you do there?
I took the cost at the beginning and I added it with the
So in other words, the 52,000 plus the 24, what we bought during the financial year as well. So that gives you what?
76,000.
Okay. And then that gives us a carrying value. You got the difference between the two, and that gives you a carrying value of what? Okay. Happiness there. Everybody together. Now, again, what I wanted us to do initially at least was, because we already have the carrying value at the beginning, we take that 27,400, and now we have our movement. It's a positive 16,400. We then add those two together. And this is why I was saying mathematically it's always carrying value at the beginning plus the movement. Okay? And then you should arrive at the very same thing. Yes, you should arrive at the very same thing. And it's looking like that. But just double check just to make sure that we are correct. It's 100%? Okay, cool. Yeah. So everybody happy there? It's not rocket science, huh? But again, can you now see what I was saying? If you don't know how to do depreciation, there's nothing here for you. Just skip the question. It's gonna go left. Okay? I'm just being honest with you. Okay? So your fundamentals in terms of depreciation have to be on point. You need to know, okay, this is why I'm excluding this amount. This is why I'm adding back in this amount. Okay? And then obviously you need to be familiar with the structure. All right? Why are we putting this? Can you see we didn't use selling price anyway, which is what you were asking earlier on. If you're not familiar with the structure, somewhere you're going to say, no, but we sold for X, when what they're asking for is the carrying value of what you disposed of. All right? When they're asking for the depreciation during the year, okay, which will include an asset that maybe we sold midpoint into the financial year. Does that make sense? So you need to be very comfortable with your depreciation in order to get this. But again, guys, this is easy. You see I left the totals. I see your hand, right? Because that's just a plus minus job, okay? I know you guys can handle that. Okay, so literally you're just adding the rows.
So do we get tested on like knowing the actual format so they give us like a blank paper and then we must write?
I will get to you right after her. Yes.
I have a question.
Mm-hmm.
Okay. So what happens in, okay, are we ever gonna get like this, but then we actually have to start from the bottom going to the top? You know how we can start from
working your way backwards.
Yes.
You could, because remember what I always say, what I told you guys in 1A. First time I probably saw you guys. The philosophy that I shared with you. Understand, master, apply. So they could do that to you. It would be quite cool, but it could happen. You know, it's a thing of leaving out information. To test, can you work your way backwards? So for instance, I did 3.11, like I told you guys earlier with the other class. In 3.11, they don't give you the cost of the vehicle. I think it was a vehicle. They give you the carrying value and the accumulated depreciation. But you're going to need the cost so that you can remove it out of the total cost of vehicles. Can you see that? So can you see you're working backwards? So they could do that to you, to test how well do you actually know your stuff. But yeah, I don't think they could do that in the whole question, because if there's somebody who's not as crowded as they should be, that's when they could have scooped some marks along the way.
So with like see the way we calculate the formulas of how we can calculate going up, but it's not apply when we have to.
Yeah, it would still apply. You'd just be doing everything in reverse. But yeah.
But isn't it like the principle of the basis? So it's like cost minus accumulated gives you carry. You know that formula, you can move backwards from any point.
Yeah, you can move backwards from any point. Like remember when you said how you actually calculated the accumulated depreciation, you said carrying value minus the actual cost, and that's how you got you see what I mean? But if you don't know the basics here, then you're obviously not going to be able to know, okay, I just need to do this. You get what I'm saying? Yeah. Any other question? Yes? They didn't give you a Word document in terms of the question answer book yet. In terms of the answer book, it's PDF. So yeah, I haven't even seen that. I'm guessing they shared that on the portal. So yeah, I don't know if they are or not. But my advice to you is that on the internet you can actually just convert to Word. So you just need to Google search PDF to Word, and then just throw in that, and then it will do it for you. Don't wait on these guys.
So the answer book, they give you such a small space to fit in other things.
Yeah.
And then I don't know, like the blocks are just not making.
Well, fortunately, it's in words, so now you can actually edit it to best. But I mean, I know in the exam or test, likewise, it's not always like this. Guys, why didn't you tell me that we had gone over our
You're just enjoying it so much.
Oh, wow. All right, awesome stuff. Well, good. No more questions. Okay, guys, so let's take our 10 minutes. And then when you get back, we'll get into unit 4. Awesome. So 16 past. Can we be back by 16 past, please?